Welcome to Fundu Money, your 24 into 7 buddy for all your money matters. Tax saving season is at its full peak. In a couple of weeks, it will get over. And right now, you'll be bombarded with chants of save tax, save tax, save tax, the mantra that we hear every year. Now, one of the lines that come to you is buy insurance and save tax. Now, this particular video is intends to examine that line. Should you be buying a life insurance policy to save tax? To get the answer, you need to wait just a little while. Should you buy life insurance to save tax? People are urging you that there would be messages, advertisements, phone calls, what have you, telling you to save tax by buying life insurance. Should you be doing that? Should anybody be buying life insurance to save tax or to get tax deduction? To get an answer, you need to first ask yourself a very fundamental question, which is, why do people need to buy life insurance? Unless you know the answer to this question, you are bound to take a wrong decision. And mind you, this is one of the most common mistakes people make with tax saving investments. And therefore, you need to know the answer to this question. So here is the answer in very brief. Suppose you're 35 and you intend to work till 58. That's when you're going to retire. You would have, every year you've been getting some income and you've been spending some money on your current requirements. You've been saving some money. Now, for the next 23 years, you would be again getting your income. You'll be saving money. The money that you'll be saving, it will be for various requirements, be it retirement, be it children's higher education, and what have you. Now, the point is this: what happens if a person, a 35-year-old person or a 30-year-old person, were to suddenly not be there? A demise happens, an untimely demise happens. That regular income, that regular saving that the family would have been benefiting from is suddenly all gone. Worse, whatever the person had saved starts getting used up. So a life insurance coverage, a life insurance money, actually plugs that gap. The gap, the financial resource gap that happens in the event of an untimely demise. Now, the whole point is, should you be buying a life insurance policy to save tax? If you see this question in the context, in the background of the narrative that I just gave you, you would realize that tax break or no tax break, tax deduction or no tax deduction, you would have still bought life insurance policy. Why? Because you want to see your family secure. It's regardless of the fact that there's a tax deduction, you would have still bought it. Tax deduction is actually a bonus. So your first focus has to be to have adequate life insurance. You can get adequate life insurance by buying a term plan because it gives you the highest coverage at the lowest premium. What it does, it frees up your savings for other investments. You can actually, this is a requirement, this is more like an expense. You're covering, and you can actually save money and make your investments. So therefore, tax deduction is a desirable thing, but you would really focus on life insurance for itself only. Now, why is this so important? The reason why this is important is most of the people, or shall I say a large number of people, buy life insurance cum investment plans. There, the life insurance component, unfortunately, is inadequate. So if you have a lot of life insurance cum investment plan, that doesn't mean you're well covered. You might be woefully short of an adequate life insurance coverage for your family, and thereby your family is actually vulnerable. So what you need to do is fix that problem and not bank on the fact that bank on the fact that your plan is giving a tax break. The coverage, life insurance coverage, has to be adequate. Then, if you're falling short of your coverage, rather shall I say tax deduction, and there's still some amount of tax deduction quota left of the 1.5 lakh annual, you can claim it from your life insurance policy. But your first focus has to be adequate life insurance. Then you start looking at whether you qualify, how much tax deduction it allows you. As it is, there are many other items that give you tax deductions without your even having to say having to do anything. For instance, Provident Fund, home loan principal repayment. There's actually a video in this channel which discusses this topic. So you need not be overly bothered about tax deduction and life insurance. Buy life insurance for your family's sake. Buy life insurance for life insurance's sake. It's important. You need to do your duty. So tax deduction doesn't come into the picture at the beginning. It should come much later when you have satisfied yourself that your family is secure. So we hope you like this video and you don't make the common mistake which a lot of people make on while buying tax-saving investments, especially related to life insurance, especially because it qualifies for Section 80C deduction. There are lots of other videos that we'll be posting on tax-saving investment throughout this month, and often on a daily basis to help you take very smart decisions while buying tax-saving investments. Do stay connected with us. Subscribe to our channel. Give your comments so that we get an idea of what are the basic requirements you have, other requirements that you might be having. And last but not the least, do visit our website www.fundomoney.com.